Howdy, Jacob here. Today we're looking at Gray Television, ticker symbol GTN, in the media industry. And oh my goodness, that enterprise value. Oh my gosh. All right, so $800 million market cap with a $7 billion enterprise value. That might be, percentage wise, the greatest increase from market cap to enterprise value that I've seen. Gray Television broadcast company owns and operates television stations. It also broadcasts secondary digital channels affiliated to ABC, CBS, NBC, and Fox. Oh my goodness, this debt is astronomical. Um, Revenue growth is stupendous, though. 10 times, over 10 times revenue in 10 years. It's crazy. Turn on invested capital, absolute garbage. Turn on equity looks massive, but they got a bunch of debt, so it don't surprise me. And all their assets are pretty much intangible. So goodwill and other intangible is, what is that? 8.5 of the $11 billion in total assets. Their long-term debt is $6.4 billion, and their cash produced is nice though. Roughly 400 million, 100 million, 540 million, 270 million. I mean, if that's averaging maybe 300 million, let's go 250. 250 million in the last 5 years and an $82 million dividend. Okay. So they can afford this dividend, but they need to start focusing on minimizing this debt, because even if it's 250 million, this is going to be over 20 times their 5-year average free cash flow. I mean, that's dangerous. If I were a lender, I would have trouble with that. So it looks like when they make these big acquisitions, they go into debt, and looks like they've been paying off a little bit, but could be too little too late. I don't know. Debt is something I definitely don't like messing with. Like, the thing is here, long-term debt of 6.4 billion. If their interest rate increased 2%, since interest rates can be uh, they're variable, but they can be fixed for a couple years. And now that interest rates are as high as they are, let's say that their average interest rate went up 2%. That would be 120 million hit just right there, which we already said their 5-year average was 250, and that's presumably almost free debt. So if their debt went up 2%, that's 100. That's a lot of impact there. Almost half of their free cash flow dwindled away due to interest expense. So I'm gonna have to take that into consideration on margin, and then their debt situation I'm gonna have to take into consideration for um, the discount rate. So I think, as for the dividend, I mean, right now it's fine, but a lot of lenders can get a little iffy with dividends if um, they're not getting their money back. And so if they do go into default, very first thing that's going to get cut is that dividend, because that excess cash flow that's going to the dividend is now going to be going to the lender to pay off the debt. But for now, I think I'm fine saying, you know what, let's stick with it. Revenue growth, I mean, maybe it's been so much, but that's with all the acquisitions they're doing, but they're going into debt to make these acquisitions. I don't think that they'll be able to do that again. And so for me personally, maybe they grow with inflation and a couple more acquisitions, but they really should be focusing on getting that debt down. 15 on average, but I'm just going to say it gets cut quite a bit. Let's do maybe 7 and 10. 0% share change, because it's kind of all over the place, and I hope that they focus on debt here. And it looks like a screaming deal. Interesting. All right, so I presume it has to be something on the P price to free cash flow. Their historical is probably more like a 2 to 5 range. But that's going to be something that I look into when I look at their historical values, because I will be doing a deep dive because it looks like a screaming deal right now. But again, um, when you value a business like this, it is very important to look at how the business has been valued in history, because a 13p on a 3% growth company sounds realistic and reasonable, but maybe this company has or media in general. I know I've looked at AMCX recently, and I know their historical P is hovered under 5 pretty consistently on their price free cash flow and even their price to earnings uh, P. So I think that's going to be the hindrance here when I look more into it. But yeah, I expect an in-depth video to come out not too long for this company. Um, and yeah, hope you have a good rest of your day. Thank you.